Hey guys, welcome back to my YouTube channel. If you're new to this channel, don't forget to hit that subscribe button and turn on your post notification bell so you get notified whenever I make new videos about forex trading. So in today's video, I'm going to be breaking down a trade that I took on Friday, which had the potential of 18R, but I ended up managing the trade to 8R because of session trading reasons. So without wasting much of your time, let's dive in. So I'm going to be doing it in a way of like top-down analysis, like how I got the idea of the trade setup. So starting from the daily time frame down to my entry time frame, which is the 1 minute time frame. So let's just dive in. So I started from daily time frame. Let me see, daily time frame. Sorry, daily time frame is 24 hours. 24 hours. So that's the daily time frame. So from my daily time frame, you can see that we tapped in. Okay, this daily time frame is a little bit shabby. Let me just go to 4-hour time frame. 4-hour time frame. There you will get a full understanding of it. And let me just back it up a little bit to this area, to this side. Okay, let me back it to this side. And this was where I got the idea. So coming down to this day, coming down to this day, I noticed that I had unmitigated demand to supply flips. That is, this demand actually turned to supply after some reactions around this place. It's turned to supply. So, and the market was moving in this direction. It was moving this way. Oh, it was moving this way, going down, which is like a downtrend, which is enough downtrend. But on getting here, it did break the structure to the upside. We are unclear if this is a strip to the upside, which will later in turn go like this. That is, break this structure again. After sweeping the upside, it breaks the structure. We don't know yet, but it is something we should be observant with. So let me just go through. Let me delete this. Okay, if this is a uptrend, if this is a good change in trend, then potentially I will be receiving a go to the downside, like a pullback to the downside before pulling to the upside in continuation, or it will pull down to this downside and go direct. But before it flows down to this place, at least it would move to the upside a little bit. I don't know where it's going to go, but it is something I was anticipating and I was expecting. So what did I do again? At this time, let me delete this just to be clear, just to make it clear. Let me delete. So at this time, I was looking at it from this perspective, and I was like, okay, if this is going to go down, which of the demand is going to hold? And I have multiple demands, but I needed to filter it down to the 15 minutes time frame. And the demand, I have reasons for my demand. So I went down to my 15 minutes time frame to get my demand zones, and this was how I picked my demand zones. First, I picked a demand zone up here. Just give me a moment. First, I picked a demand zone up here, around this place, and this was the demand zone. Let me draw it back again. This was the demand zone, and this demand zone, I picked it because for some reasons, and one of the reasons is that it broke structure one. It did break structure here. It did break structure here around this place. You can see it break this structure to the upside, and it had oh, not what I wanted to pick. It had some inducement around this place. Just give me some few minutes of your time and we'll understand this concept with time. So it had some inducement around this place, which are some potential stop losses. Some stop losses of the buyers that bought from this area. That is, after it went to the upside, some buyers were like, okay, this is a support zone. So they were buying around this place with a stop loss somewhere below here. So I was expecting that the market would go up a little bit, then come down to this demand zone after sweeping all this liquidity. So I set my alert around this place. And this was the price of it, 1.08198. So I waited for it to trigger, and this was what actually happened. Instead of it to trigger, during this was as at this time, it was new Asian session. Sorry. So Asian session, one thing about Asian session is the consolidation. And if I turn on my Asian session range, you will see that there is always consolidation around this Asian session, and this is like a good setup for me to see once the Asian session consolidates, then tap into the next demand. Like for example, once the Asian session consolidates like this, then next thing it strips the demand, the Asian session liquidity, lower side liquidity. Then I'm expecting it to clear the upper side liquidity. That's just it. A very nice setup and a very good setup that most of traders trade, but this time around it didn't work that way. So what was I expecting? After I set the alert around this place, I waited for it to come down to this place. So during 8 o'clock, that was around 7:30, around New York's London session opening, it went direct at my alert. I opened my chart and looked for entry criteria. There was nothing like entry setup around this place, so I had to delete this place. I had to delete this demand zone, then say, okay, since this one is not holding, maybe it wants to use this one as the inducement too. So I was like, okay, let me go and see what will happen. Then I set my alert around this place, this demand zone. This was the demand zone, the next demand zone after the one that had inducement. So the reason for this demand zone is one, the break of structure here and the inducement. So it came down to this place again and triggered my alerts. And as at this time, I was in class at 8. Sorry, let me just back this a little bit. So at this time, it triggered me in. It triggered my alert. Sorry, not me in. It triggered my alert. Then I moved down to 1 minute time frame to see what was happening around that demand zone. So first thing first, I noticed, let me just turn off this my Asian session range. First thing I noticed here was that it immediately tapped me in. Some traders would have like said, okay, it has tapped, then the first shock is going to be a change of character. Then they will place their trade around somewhere around this place, thinking that okay, the market, this is just fear of missing out, will just kill your trade most of the times. So you just like place your stop loss around this place and say, okay, this is the first shock. Then this sometimes this first level I don't usually trust it. I just have to wait for it to at least give me 2 moves to the upside, or it strips the liquidity to be clear. And thank God I was still in class, so I was not checking this. So I came back to the chart around this level when it has already swept the liquidity to the downside. You see, if you had a position like this, you would have gone out of the trade. So it came to this area now. I was like, okay, wow. And this was the supply zone that caused this strip of this liquidity down here. So I was like, okay, I set my alert around this place to see around this red tab to see if it's going to break to the upside to give me a confirmation that okay, you're good to go. So once I noticed this around this place. So I was waiting for it to break this top side to give me a confirmation that I'm good to go. So the next thing I did was like I set my alert, then I was waiting, then I was waiting, then all of a sudden my alert triggered with my phone. I was not with my computer this period, so my alert triggered with my phone. So this time it ticked and closed above that supply zone that actually caused the sweep of liquidity. Now, if I'm to ask which demand zone will I pick as my entry level, well, some people will say this one, this reaction demand zone. Some people will say this reaction demand zone because it has swept liquidity, reaction liquidity, and went to the upside. But one thing I've noticed that with this setup, I have failed and gotten most of my losses with this setup. So I always like to wait for the extreme that has clearer and important reasons to wait for. So now for this one, this demand got mitigated by this one, and the next one followed. Then it's now forming another one, which is like giving me a sense of supply chain around this place. Sense of supply chain. Let me delete this, which is giving me sense of supply chain around this place. If I zoom it out like this, you will see something like it's a very clear supply chain. Let me just show you. So it's like a clean, very clean supply chain. The first one was this, it got mitigated, it broke the structure to the upside around this place. The next one, it swept some of the demand, which is another confidence for me that okay, now it has stripped this liquidity to the downside. After sweeping this liquidity to the downside, it still went up to break the structure, and now then I was very sure of this demand. You don't have to be completely sure, but you are sure of your strategy and your edge. That is, you are not sure of what will happen next in the market, but you are sure of your strategy and your setup. So Immediately I got this setup like this, I had to like place my sell buy limits around this place with a 3 pip stop loss and wait for it to trigger me in, and it triggered me in. After triggering me in, here this is how I manage my trade. The high that start me in, I will break even immediately, and I am not using a assistant trading assistant. It would have been a lot easier for me, but immediately it tapped me in, I went straight and was waiting. Now it came back to the zone again, which is like forming another chain again. If you notice, it formed another chain again, but this chain didn't actually break structure to the upside, so which is not actually a good chain for me, except the chain breaks structure to the upside around this place. Like for example, it breaks structure to the upside. Oh, whatever is my drawing. Like for example, if this one breaks structure to the upside, then this demand zone will be a very, very clean demand zone for me to trade off of. So that's it. So I was waiting. Now it has broken even. I took my setup from the I took my stop loss from this place to my entry area. So in case it comes back, I will just lose only the trade, nothing else. I will not lose my capital. So next thing that happened here was it was going up, and because of the session, there are some sessions that I always like to trade one session, and that session is either London session or New York session, depending on the day I have classes or the day I think I see a good setup. So now it came all the way up to this place, and around 12 o'clock, which was the close of London session, I had to go out of the trade, and this was the 12 o'clock here. This was 12 o'clock here. It was around 8R. This ruler. Oh my god. Oh, sorry, control. Okay. It was around this time, 12 o'clock here, that I moved out of this trade with 8R. And if you can see from my Asian session range, you will see that this indicator actually ended here, and that was the time I moved out of the trade. But if I were to be trading, okay, I would say okay. If I were to be trading, including London's New York session, then this setup would have been a nice setup for me to live to this extent. I would like love it to go to this extent, which is like 15R or even 18R, which is 15R. Yeah, it went all the way to 18R, but I would go with this 15R, then leave it that way. So around New York section, for the New York section, it was consolidating. All of a sudden, it moved to the upside, and boom, this would have been how I got 15R. So now, if I didn't have the opportunity to trade this New York and this London session, then New York session would be a perfect example for me to trade. Now you can see that this setup is almost similar, just that I don't want to go back to my smaller time frame. I would have showed you something here. So but now you see that for this Asian session liquidity, Asian session, there was a supply that actually broke structure to this downside. So but this one here, this is like the exact entry criteria we always use. So this first one was the sweep. Let me change it to sweep, liquidity sweep. Then the next one was the break of structure, which is the chalk. Let me tap it again. Next one was the break of structure, which is the chalk. Then you notice that I will always like to pick the extreme, except on some special cases. That is, some special cases that the liquidity has been swept, and this liquidity has not been swept. Instead, it just breaks indirectly. That is, except the liquidity of the reaction here, that is the reaction that happened here, then it sweep the reaction, then come down, then I will pick that place as my entry. But since that did not happen, I'll just pick the extreme, and lo and behold, it's tapped in again. Well, I won't enter this trade at this moment, but the next one, I'll wait for the next supply again to hold again, and the next supply was this one. Instead of holding, it's mitigated again, it came down, but the next one that I did hold was this one, like this one. If I had to go back to my 1 minute entry time frame, let me just go back. 1 minute entry time frame, we see something around that place, just that it will be a little bulky. Sorry if you are not understanding. So now, sorry if you are not understanding, but if you like go through the video again, I'm sure you will understand something. Now this chain is now forming, so you can see that this one exactly, this particular demand, this particular supply that broke this structure, actually caused a sweep around this place. It caused a sweep around this place. Not this one. It swept this high, this small candlestick here, which is like trying to mitigate the previous supply, inner supply. These are smaller time frame things you won't see. So, but with my view, I think I can understand it. So the next one you will notice here is this place. This was the sweep. Actually, after the sweep, it went down this place and broke this structure, which is a good confluence for me to set my entry to this spot. And you can see from this spot, like if I had my entry around this place with 3 pips stop loss to cover the high, I would have like gotten enough. It tagged me imperfectly, and that would be it for the day. Then the next thing I would have done is target my next demand zone, which was the actual demand zone I was planning to trade, because I can see that this demand is already weak because it could not break this one. So I'm going to say, okay, this one is going to go. The next demand that is going to hold is the one that is down. If it's actually going to hold, then I'll target this place, and that would be how many R for me? That would be 20 R trade for me. So imagine I had this trade 15 R, or let me say, okay, I had this trade for 10 R, or let me say I had it to this point. No, you don't know what will actually happen, but let's just assume I had this trade to 16 R plus 22 R, depending on if I trade the 2 sessions. Then just imagine I would have been done for the month, because I'm not that kind of trader that trade always. This is the only trade I took for the week because it did match my setup. So I took this trade and that was it. So I got 4% because I risked 0.5% on my personal account. I'm not risking 1% because I'm not concentrated. Like, I don't sit down to trade. I only trade from my phone, which is not advisable if you are a beginner or intermediate. We just hope like we get better. So this was a quick trade on Friday, 16R and 22R. Just clean setup. You can see almost the same setup. Sweep of liquidity to the upside, the supply chain, sweep of liquidity to the upside, supply chain, and that's it. We are done for today. And I don't think there's anything hard with trading most of the time. It's just that it's a process that you learn with time. And I really hope you enjoy and like this video. Hope to see you in my next video. And please, if you enjoyed this video, don't forget to subscribe, because I'm loving this whole concept. Have a nice day and thank you.